Welcome back, everybody. It's great to be with you again. Welcome to those of you who've joined again after the morning session, and special welcome to those of you who are joining for the first time this afternoon. Executive Vice President Valdis Dombrovskis spoke to us earlier today about the twin priorities of climate finance and the digitalisation of the European economy, particularly in financial services. And we now have 2 hours to explore these themes in detail with some of the world's leading experts. Julian Skan from Accenture is here to introduce them and to help us understand what we can expect from Europe's digital transformation in the financial sector. Welcome, Julian.
Thank you, David, and hello, everybody. My role is running the strategy practice for banking globally for Accenture, and I also run our fintech program. And for the last 6 months, I've been seconded to HSBC, overseeing their digital investments globally in the commercial bank, including through the COVID period. The topic of today is the impact of digital, or the impact of digital on the sector, both during COVID and afterwards. And so I'd like to invite my 2 co-panelists, Peteris Zilgalvis from the European Commission, who is the head of the Digital Innovation Unit and Blockchain within the Digital Single Market Directorate, and he's also co-chair of the FinTech Task Force. David Reed from Investec is the Technology and Innovation Lead and Strategy Lead for Investec. Welcome to you both. Maybe you could just say a word or 2 about your experience. Peteris, let's start with you.
Thank you very much. Well, I'm, as it was said, I'm in charge of digital innovation and blockchain in the digital single market, co-chair of the FinTech Task Force, so working closely with my financial markets colleagues who work for Vice President Dombrovskis, who spoke this morning. I'm on the side where we have the EID, the cybersecurity, the e-health, the Digital Services Act, and upcoming and emerging technologies like blockchain. In the past, I've been a head of unit for other subjects in the European Commission. Also, I worked for the World Bank, was a chief counsel in the Latvian Civil Service, was in the Council of Europe for some years, and was a visiting fellow for 1 year at the University of Oxford at St. Anthony's College, working on fintech at that time. And that's how I got into it and perhaps introduced it a little bit to the mainstream of the European Commission from the side of the digital single market, as I said, in collaboration with financial markets.
Thank you, Peteris. David.
Yeah, thank you, Julian. Julian, I'm actually from Invesco, not Investec. So the mountain is not the zebra, just in case Investec think they acquired a new director they didn't realise they had. So thank you. No, so as Julian said, I'm part of our technology, strategy and innovation team based in the UK, but part of a global team. And the team's role is very much working alongside our technology organisation more broadly, but also very closely aligned with our business partners and working to look at the challenges and opportunities that our business are facing, and how can we understand the emerging trends in technology and to a degree accelerate the adoption of that technology into the organisation where that's appropriate. So that takes the form of a number of different things. We work, and we'll talk about this a little bit later on, I believe, but we work extensively with the fintech and startup community in terms of bringing in capabilities that we think can add significant value to our business. But we also undertake some proof of concept work as well with a dedicated team of technologists that we have at our disposal. We have global coverage, so we're in all of the countries where Invesco are operating. Just in terms of background, I've been in the asset management industry for a good number of years in a variety of guises. So both on the technology side and sat on the business side. So I've kind of I've seen technology through 2 lenses, and also spent some time as a consultant as well. So consulting into the industry. So I guess is a broad brush of experience to draw upon.
Thank you, David. Apologies for getting your organisation wrong. So this is a very wide-ranging topic, and what we've tried to do is to frame 5 areas that we will talk across. And I'm going to give a few thoughts about the impact of digital across these 5. I'm then going to take a look at the banking sector, which is more of my specialization. So I'll switch from moderator to panelist, and then I'll open things up and ask David and Peteris to come in on their areas. I stress that questions are more than welcome. They will be passed through to us, and I will moderate those and pass them to the panel as we go. We have just under 1 hour for this session, so there should be plenty of time for questions. So if we, take a step back, I think some of the key questions, sector by sector, I think for the banking sector, this is a period where banks are having to reassess their assumptions. The assumptions around the market structure itself, in terms of who may struggle in the future, whether the challenger banks will make it through, and whether the industry will become more horizontal. I think there's a question about customer needs. There's a lot of quantitative and qualitative survey data on the retail and the commercial banking level of people's needs after the crisis, not all related to lending, but a lot about lending. So have the customer needs changed? Is that enduring? Also, the question of the adoption of digital and the customer behaviours is one there's been a lot of noise and press about. As one commentator put it, have we gone in a time travel and moved 5 years forward in terms of people's willingness to adopt and try new ways of interacting with their financial advisors and banks? And maybe the other major area for the assumption revisit is risk. This being banking, you can't avoid it. And on the credit side, the counterparty side, but also the operational risk side. The second major issue, I think, for the banking sector is the question of investment. Both the quantum of investment, given the weakened state that the sector emerges from COVID, despite the build-up of the balance sheets in 2008, we're likely to see a long-term period of a setback on the ROEs and the ability to feed the capital buffers having been drawn down on. But also at the strategic tactical level of what do I invest in? Do I carry on with my existing slate, or do I change direction based on what I've learned about customer needs? So I think there's some very big investment questions for the sector. And finally, role and purpose. A comment has been made many times, the banking sector was the cause of the crisis in 2007, and maybe it's part of the answer now. And I guess the question is that true or not? Can it be true? And do the banks have the will to make it true? In the policy area, there are big questions on whether we have the right policies now, for Europe, whether the policy focus should change. And as I know Peteris will come on to speak about, whether the speed of harmonization for Europe needs to change. On the asset management industry, clearly this was a sector where the business model has been under an intense squeeze for many years, and the adoption of digital was well underway. I think the 5-year forward question for the asset management industry is particularly interesting, but there are also questions that we may or may not get to today around the changes there may be in the addressable market on the buy and sell side, but also around the investment trends, where's beta shifted to, what do the returns look like, and what is the risk appetite in a post-COVID world with some long-term effects from quantitative easing and other government measures. On the fintech side, I guess there's a question about whether there is an existential threat to some fintechs. Fintechs is a broad church, but if we include challenger banks, we've seen some struggle with revenue or profit, although customer acquisition has done well in most European countries. But I think you'd have to ask whether for that subsector there's an existential threat. And then across the board, both for the collaborative as well as the competing fintechs to the incumbents in the sector, there's the question of the capital shortfall and whether there's enough money to keep these players going through the series rounds to get to scale. And finally, on resilience, I think some of the key questions, first of all, what should we learn? What have we seen in operation resilience? and operational vulnerabilities in the sector during the COVID period. And then looking forward, what does credit risk look like? What do the capital structures look like? Maybe finally, what is how has the risk shifted in terms of systemically important players? So will we see processing companies that have not had the glare of a complete banking license regulation and whose accounting practices may be less long-standing than the banking sector? Will we have issues because we are reliant on those type of players? So that's just a snapshot. That may have got the thinking process going for questions. Let's get on and answer some of them. So just double-clicking from my side on the banking sector. Short-term, what we have seen across the world and in Europe is an acceleration of digital adoption. No surprise with the difficulty of using branches or sitting down in front of a financial advisor face-to-face. The decrease in cash is about 25% for most European markets, which is a significant acceleration towards electronic forms of payment and obviously a contactless adoption at speed. One of the biggest changes has been the government lending schemes needing to go through the banking sector, and therefore the rush to scale up or get to market the no physical presence credit decision for small and medium lending, which has really shown the difference between people who were kind of ready and people who were still in the development stage of their capabilities. I would say, as a European, we have seen a lot better performance by the banks in using digital in that critical credit space than we have in some of the US or even the Asian counterparts, where they've had to throw a lot more bodies at the schemes. And notwithstanding the fact that certainly for Germany and the UK, the volume of the lending per SME business has been much higher. We've also seen quite a lot of changes in distribution, which have been accelerated. The use of virtual call centres, because customers have a lot more questions, and spreading that from physical call centre into working at home has been quite a feature. And finally, in the product set, you see some acceleration towards simpler products, which is a very welcome industry phenomenon because it's something in removing the complexity many banks have been trying to do for years. So, for example, in the trade finance area, there is an increase in the straight-through supply chain and open account type products over the more traditional documentation-heavy type products. And that's replicated in many product areas across the sector. Those are the sort of short-term during the crisis. I think the other thing to say, and we'll come back to it on resilience, is that there were no major issues in terms of ongoing support, either on the technical side or in terms of ability to provide critical resources, particularly getting this credit to market. I'd say when we look back on it and we have more perfect vision of what was going underneath the covers of some of the banks, we'd probably find it was a sort of a close run thing because some of the bottlenecks were probably pretty close to breaking. But given that we are now over the curve of that immediate getting the credit out, I think we can draw some satisfaction from that, and certainly the resilience of critical items that the regulators would be concerned around the money supply. Everything held up pretty well. A lot of the remote working that was needed from a lot of the banks across Europe, some of which is in offshore centres, we can't say that we're out of the woods, because obviously the impact of the virus on some of the geographies where the banks are heavily dependent, including colleagues in India and China, particularly in India, we don't know where the top of that curve is, so that remains a concern. Longer term for the industry, the impact I would highlight two that we think are going to be very likely outcomes. One is to do with the acceleration towards horizontal services, by which I mean the long-awaited breakup of the vertical integration of the banking industry. We feel that that will be accelerated, partly because of the shift in commerce to the digital platforms. It's got even faster and even larger, and partly because the needs of individual players within individual customers in the corporate and commercial sector has put a highlight on digitizing quickly. And so the use of APIs to take smaller banking services and get them out into platforms, into customers, without waiting for the whole service proposition to move forward a generation, we think that would accelerate as competition means that people want to get their digital widget out before the next player. Secondly, the mutualization of cost, we think will be a growing trend. There's quite a lot of cost mutualization built into the European banking sector, going back as far as the restructuring of markets after World War II. But actually, that didn't change a lot from the 30 years when I joined the sector to now, in terms of players who are, credibly running key processes. And we think that that will change because of the need to find greater productivity savings than even the largest individual players can do, combined with the cloud, the public cloud benefits when they start to climb into the banking sector more materially than the current sort of 5 to 10%. So those two things we think will be the longer term thing. Let me finish the section on banking just by saying a word about this question of purpose. It's very easy to be naive on this, and we've thought long and hard about it and done quite a lot of research. But the question is, I think, can the banks come out of the crisis having built some trust, maybe, and can they maintain that trust and convert that into a sustainable commercial advantage? Specifically, we know from customer research pre and during COVID that there are new and greater needs for help and advice in managing finance. One of the most interesting things in the research is that this is not just the unbanked or the financially struggling. It turns out we're all a bit rubbish with money. And some of the moves that have already happened in innovative banking apps, like helping you put a stop on your betting, behavioral nudges based on a deep understanding of your wants, needs, and your likely spending patterns, using AI to make predictive assumptions about when you're going to run out of money, and tell you things you didn't know about how you're wasting money. We think we're really just at the tip of the iceberg of what that can deliver in helping people with their finances. We also feel that there's a longer term opportunity, and this bridges into the investment management and asset management area, to extend advice from being a red carpet pathway to a product and into more of a fee for service to help people with the complexities of understanding the financial context before they're thrown lots of information about a product. And we've seen some players already launching fee-for-service advice propositions, which are not traditional high-end wealth management offerings. So we think these two areas offer quite an amazing opportunity to regain purpose. What it requires is to be economic, and that's the tough part. The banks are not going to be able to just undermine their profit even further. But when you analyze the concept of good and bad revenue, which has been around for 5 years, you find that there's a lot of ways in which banks earn money, which has a very negative impact on people's trust. And there are some ways in which there is no impact on trust. And so the hypothesis is, can you afford to remove the fees which erode trust? And can you gain enough market share by using the trust advantage to offset the revenue you've lost? And we think you can. We think there's a 7% revenue uplift opportunity, which can cover the loss in the bad revenues. So that's our hypothesis. So that's a few thoughts about the banking sector. Welcome questions on that, but let's broaden out. David, what have you seen on the impact of digital in your sector?
Yeah, thank you, Julian. I mean, I think, if we sort of break this down into the sort of initial impact, I mean, I think Invesco, in common with many other organisations, had been moving towards a flexible and the ability to work remotely for some time, and that enabled us as an organisation. I think the global nature of our organisation as well. People are used to working virtually and in remote teams. So, the initial kind of impact of lockdown, suddenly the business is moving, completely virtually overnight, was a relatively seamless experience for us as an organisation. So, we had great capability from an infrastructure standpoint, so everybody could speak to each other internally, which was kind of the initial concern. But that all went very well. But I mean, I think the focus very rapidly moved from that to, how do we, this is at the same time a very volatile situation in terms of markets, given everything that was going on. And the ability for us to access and interact with our clients was something that we moved to very quickly. And I think, we were able to link up with our clients and speak to our clients very effectively in throughout this period, we've moved significantly a number of new initiatives that we've been working at for some time. So we've got a digital roadmap that's been work in progress and will continue to be. But the ability for us to significantly increase our digital footprint, if you will, with our clients. And when I talk about clients from an Invesco standpoint, we're talking predominantly about the people we're interacting with that are in the institutional wholesale space. Although we have seen a significant uptick in consumer consumption of content that we're making available digitally. But I think from a client engagement standpoint, I was talking to our head of distribution last week in preparation for this session, and we saw something like, I think it was a 50 to 60% increase in March and April in terms of digital interactions versus January and February. And that was, obviously a lot of our clients were working in exactly the same situation, so working remotely. Maybe they had more time to look at what was available in a digital online context. But this was everything from thought leadership to seminars to market commentary, and we were able to get that message out to our clients and provide reassurance and advice and context to what was a rapidly unfolding situation. Globally. I think the other thing that we've seen as an impact of this rapid transition was it's absolutely fostered, I think, it's kind of blossomed this agile and innovative mindset in terms of approaching issues. So, I mean, one very specific example for us, Zoom was not a core part of our web conferencing capability. And there was obviously a lot of latent client demand from people wanting to access that particular technology to interact with us. So that was a process we were able to move through, all of our sort of security and other infrastructure checks much more rapidly than we would have probably done in more normal times. And I mean, I think the upshot of that is it will, as we move out of this situation, I think people will start questioning what if we can do that in exceptional circumstances that were prevalent during the COVID crisis? Can we keep that mindset and preserve this as a good thing that's come from this situation? So we can look at the change that's going on much more rapidly and in a sort of more nimble and agile way. So I think that's a very positive thing that we've seen come out of that. I guess on the investment side. One of the things that was very interesting from our investment team standpoint was the ability to assess what the media sentiment really was with regards to the pandemic and to COVID, and how that was potentially going to shape and inform government fiscal policy as we went through this process. So we were able to, working closely with some investment colleagues, put some AI-driven experiments together where we could, we were mining lots of media sentiment information across the globe and actually deriving sentiment from that, and using that as another indicator as part of our process of liaising and discussing with clients their approach they should be taking in servicing their investments and so forth. I think in terms of what are the inputs for or the outputs for us as we start to move into a more stable situation, undoubtedly the client interaction model, and I think this is common across most, will change. I think in certain instances we've got anecdotal evidence that some interactions clients actually prefer now to do virtually if they weren't doing that already. So I think the balance between face-to-face, and I'm absolutely not suggesting face-to-face meetings will disappear, but I think that balance will change. And there are certain interactions and certain meetings that clients would prefer to undertake virtually. In some ways, I think they can have more control of the conversation. Perhaps they can take back some control in those instances. And that for us as an organization, in terms of interacting with our clients, will force a change of behavior, because it's a subtly different skill set interacting in the way that we're all doing today than it is having a face-to-face meeting with clients. So there's a cultural training and development kind of scene that I think will come as we move forwards.
Very, very interesting. Very interesting in that sentiment point, because I've heard a lot of people of tapping into this, and I was reflecting the other day that my own sentiment and everyone I'm talking to as we sit in these boxes is sort of rocketing up and down on a daily basis. So I wonder if that signal is somewhat distorted by the mental state that we're forced into.
Well, and when we've looked at the results, I mean, obviously these results are, as I said, they're very experimental and early days, but it's interesting to see the regional difference when you sort of aggregate those results across a number of different sources. So we're not just, there appeared to be a more negative sentiment taken by, for example, the UK media, certainly earlier on in the process, and I think that may well have been, that whole stage when when government were looking at different ways of approaching lockdown and different attitudes, you could see that reflected in quite a negative media sentiment that I think that came across, as opposed to sentiment in other countries at that time. So, but as you say, it's a volatile signal, so it's only part of the process that people were using.
Fascinating, thank you. Peteris, let's switch to you. I know that the Commission's made clear that growth will be digital. That was a message pre-COVID. And when the crisis hit, you were in the process of defining and publishing the strategy for the digitization of the single market. How has that impacted your thinking?
Well, I mean, I can say we had a whole set of initiatives that had just been launched or that are about to be launched. And the crisis has not halted any of them. And in fact, in some cases has pointed up how urgent they are. Something that we underline often is that the EU Green Deal equals digital EU. So both the move to the green transition, which in a lot of ways will be enabled by digital technologies, and the digital transformation are going forward, are going hand in hand. Initiatives like the SME strategy, adopted right before we went into lockdown on the 10th of March, stay as important as ever. Our concerns for our SMEs, helping them through the crisis and then into the recovery, as well as giving them new opportunities and new opportunities for growth. If we look a bit on the fintech side, we've done an analysis of the startup landscape. I also run the Startup EU initiative in my unit. And there we have divided the impacts of the coronavirus into structurally positive, cyclically positive, structurally negative, and cyclically negative. And we find the fintech sector in both structurally positive. As you said, there's more and more of a move to cashless payments, touchless payments, and as well cyclically positive. There are obviously impacts of the crisis that also are not positive. The sharing economy, which was a big user of fintech services, has taken a big hit, and it's possibly going to be structurally negative, depending how much people want to share and not own their own things, or their own means of transport or accommodation. Something else that I can underline is, of course, we had the earlier FinTech Action Plan. We're updating it with a digital finance strategy. The public consultation just closed. We just closed fairly recently the artificial intelligence and data strategy, not strategies, but the public communications. We're coming forward with instruments on that. Open right now, you have the public consultation on the Digital Services Act, the one that's addressing the platforms, and a whole set of questions on smart contracts. We just recently closed and are moving forward with the digital assets legislative instrument based on the public consultation. So pro-innovation as fast as ever, if not even faster. And this is all linked on my side of the table to initiatives on cyber resilience, EID, and also the European Blockchain Services Infrastructure, which is moving into full deployment and will be using, which is also good news on the deployment side, that the recovery package foresees a very strong element, which was indicated not only for the green transformation, but for the Digital Europe program and digital investment. And then I can just say we have both a AI, artificial intelligence blockchain investment fund already dispersing, and a green tech investment fund coming. So again, digital going hand in hand with the green transformation.
That's great. A very impressive slate. If I can ask, have you sensed, if it's not too early to tell, any difficulties because governments are dealing with their own issues within borders? Is there any headwinds towards getting a harmonised European point of view around these topics? Have you sensed it getting harder because of the agenda?
I mean, in the short term, yes. I mean, we are used to working that we're meeting with the member states personally. A lot gets done, taking the example of the European Blockchain Partnership or multiple council working groups. Not meeting together inevitably makes the meetings a little bit shorter, in a way more efficient, but you lose perhaps a little bit of the dynamism. I think actually we will not lose any speed. And I think, at least in the areas that I'm responsible for, there hasn't been a retreat to some kind of national thinking, rather very much an emphasis on the recovery, that we're faced with a challenge that is something like economically the beginning of the 1930s. And if we act together, working hard together, and utilizing the different enabling technologies that we have at our disposal now, we can perhaps avoid some of the problems that period of history had, and build really a sustainable, digital and competitive EU, both infrastructure and society, because the citizen has to be at the center of all of it. Also, with the move to the cashless payments, the touchless payments, it's something that I and a lot of people perhaps in my sector welcome, and I also welcome personally, but we have to make sure that it's inclusive. We have people in our society who don't have bank accounts, we have vulnerable in other ways, and it's not so easy for them to use these technologies. Perhaps they don't have access to a smartphone. So this has to be factored in. And finally, we're coming with the cyber resilience legislative initiative and a cyber security competence center, a set of initiatives there. This is both DG FISMA, the financial services colleagues, and DG Connect on the purer cybersecurity across all sectors. And as we make this move to more digital, we have to make sure that it is as secure or more secure.
And just, I mentioned purpose, really talking about the customer proposition, but you talk about a rebuild. In the period of history you're referring to, there was very much a common purpose. I mean, the European common purpose for rebuild, and that led to a financial structure in Germany and other parts of Europe, which withstood the test of time as being a very smart way to organise the sector. Do you feel in the conversations and the way regulation is being thought about and policy is being thought about, it's possible to capture a European angle to the rebuild here? or is that just a kind of a wish, and actually we'll all revert to being selfish consumers? There's no bow wave to use. What's your view on that?
Well, I mean, one of the drivers for the market is individual interest, going back to Adam Smith, but sometimes commentators forget that he also wrote the theory of moral sentiments, and there's also an ethical side and a side that is societal, and there's things that both government should do and also market actors should undertake. I mean, we do very much underline that the European values, the citizen at the center, democracy are parts of our technological design. Taking the example of the blockchain a little bit, here we're working with the 29 countries, Norway, Liechtenstein, and the 27 members of the EU to build a public service infrastructure. We're justified. We're not carried away by the hype. We don't think it's justified for everything, but where you have a multi-level governance model and need to share data, share transactions, we think it's very good. And it's being built in the public interest. It will have public-private partnerships, we think, in the future, but the very basis of it will be this multi-level governance, the member states, the regions, the cities, with the citizen being served. So also in the standardization, which is also in my unit, I have the ICT standardization coordination. We also are trying to make sure, working with the policy leading units on things like AI, 5G, cybersecurity, that of course they're secure, that we have competitive industries here in Europe, but also that they are working in the interests of the citizen. This is, again, a moment where we can rebuild and rebuild better. And I think I speak for both the institution and myself personally. We're also faced with the unique challenge of climate change that we have to deal with for our children and grandchildren to come, that we will not be, allowed to mess that one up.
Here, I suppose so. Let's bridge a bit into the fintech question a little bit more. You mentioned it, Peteris. But David, if I maybe come to you first, a question that is being asked is whether or not there'll be an issue in terms of investment capacity. Some governments made some attempts in Europe to help this sector, but it was very much a second or third cousin to the main initiative in terms of where the financial aid went. And in some cases, some commentators said that government money didn't really sit well with private high-risk investment. Does that amount to a shortfall in risk capital for scaling fintechs, in your opinion? David, do you have a view on that? And then we'll come to the same question to Peteris.
So, sorry, that's to me, Julian, sorry.
Yeah, if you've got a point of view, yeah.
Yeah, I mean, I think we, as I mentioned in my opening comments, I mean, we work very closely with a number of fintech and startup communities around the globe, and we absolutely, and we're working in two parts. One, they're very much part of our innovation and lab strategy, so we'll often work with fintechs where, as I mentioned, we can bring them in to accelerate the adoption of a particular capability or skill set. And secondly, we have a private equity and venture capital arm as well, with a significant focus on that. So, I mean, I think we, as an organisation, absolutely see that this area of the market is absolutely essential. So we continue to invest, strongly within this particular marketplace, and both from a investment standpoint, but also from working with various incubators and so forth in terms of, mentoring companies through and then working in partnership with them where we think that's appropriate. So I do think, that whole area of the gig economy has come under probably significant pressure and tension as a result of COVID. So undoubtedly there are companies that have felt the full force of the impacts of the pandemic. And I certainly think, in many ways, I think, we've talked a little bit about financial inclusion, and in certain marketplaces we've seen the unbanked increase in certainly in some emerging markets as we've gone through this period. And I sense that the fintech and startup community often have the right mindset to start addressing how we can increase financial inclusion for some of those people. So I understand the sentiment that says, that government money doesn't sit well with what you might regard as high-risk investments. However, I think that sector of the economy certainly can unlock some real solutions to greatly benefit the population as a whole. So I certainly think that's something that needs consideration as we move forward.
Thank you. Peteris, what's your view?
I mentioned some of the actions, some of the legislative and other initiatives that we're undertaking. We also analyze, it's good to, I think, hear for the audience. And we've been analyzing some of the effects of before the crisis and just now. We see that there are 67 fintech unicorns in the world right now, valued at, and this is a global statistic, so it's dollars, $252 billion. A number of them are in Europe, ranging from N26 and Klarna, TransferWise, etc. However, since the crisis started, we see that fintech deals have dropped, venture capital-backed deals have dropped to 2016 levels in 2020, in the first quarter of 2020. So we're at the level of first quarter 2016, which wasn't such a bad time. Fintech was already starting to boom, but still it's much less than we were at in 2019, where we had quite large investments relatively in the European Union fintechs. So we do see this near-term impact. Partially, we're hoping to deal with it with a push from the recovery plan. We have the European Investment Fund. I mentioned something that was already on track was the AI blockchain investment fund, which can have a fintech element because that can be AI or blockchain. So fintechs either using robo-advice, other AI capabilities, also blockchain-based fintechs. We also have the EIC fund coming online as of yesterday, so it's in a different part of the commission. So I'm also finding out a little bit more about the details of that. And then again, back in my house, in my unit, a green tech investment fund, which was online and in development, but now should be dispersing already next year. So we are trying to fill the gap a little bit with the public money, which also fits the history of venture capital, which started to a great extent in the U.S. with the SBIR government programs and with some of the early Silicon Valley security and defense-oriented venture capital. So this is from our side, and then hopefully when the recovery starts, which the latest news are that things may be a little bit better in the pickup after the crisis than that some people had expected in business sentiment. Hopefully the private investment will pick back up as well, and then the public investment will only be an element of it. Something else that I would emphasize in the public investment, that we also do pay attention to having a spread. It's not quotas or anything like that. The investments by the EIF and the venture funds it chooses are for the best investments, but we do try to pay attention to also looking at investment possibilities in some of our upcoming ecosystems, so not just simply in the best known ones. And then you see unicorns like UiPath from Romania coming out of there and then actually going to global prominence. So this is where, to use what shouldn't be a cliche, that we're united and we gain from our diversity, but that actually we have a lot of smart people and a lot of dynamic people throughout the EU. So part of what we can do as the European Commission is, while still saying merit-based for an investment, really bring attention to the possibilities that exist for investing in really dynamic startups and smart people, not only in the known places where we're obviously supporting Paris, Berlin, etc., but also in some of the up-and-coming ecosystems.
Very good. I think the diversity of those ecosystems is very important. I've visited many European cities, and to assume it's all about, as you say, Paris and Frankfurt and London is very wrong. Innovation is everywhere. A couple of thoughts from my side on that question. we run our mentorship program in Hong Kong, London, New York. The London program ended end of March, and there wasn't any demonstrable, from the anecdotal data, reduction in the interest in funding for the fintech cohort at the sort of seed stage. Now that could be what I understand is called the WTA investment issue, which is what's the alternative, which is usually used to equities, but I think maybe it's also applies to fintech investment. But hopefully it's more positive than that. The other thing I have observed is that the number of digital banks brands set up within incumbent banks globally, in a number of cases, they have been downscaled in favour of going for digital in the main offering. And I'm not quite sure what to read into that, but it could be that the incumbent sector feels it's got a bit more time to get its digital mainstream online rather than having to carry on riding the speedboat. But I'm hypothesising. Views from the audience on what that means, more than welcome. The only other thing I'd say is, I don't know if you guys have got a comment, but one of the things I get asked most often about the fintech sector is, what's the impact on immigration on the sector to any European market? And of course, the answer is huge, not just from collaboration, but also from raw talent. And question if effectively we're going to lose free movement of people. And may come and go over the next, 1-2 years. Is that going to be a drain on Europe in comparison to, say, the States or Asia that may not be hit so badly by an ongoing lack of movement of talent? I don't know if either of you got a point of view on that, or we'll just leave it hanging there as a question.
I can intervene. I mean, actually, from the side of the Commission, something that was promised in this small and medium enterprise strategy that I mentioned on the 10th of March, and that we're working remotely at full speed with members of the ecosystem on, is a startup nation standard, and we'll soon have meetings with the member states, probably also virtually as well. And one of the things we're trying to encourage there are the startup visas and the accelerated immigration procedures for talent, either from third countries or people who want to expand their startup or move their startup to another EU country, also with lower procedures for setting up an affiliate or registering your startup there. So this working with the community, with a lot of the top startup founders and investors of Europe, we're trying to encourage this. I mean, you get all the statistics from Silicon Valley, excuse me if I don't have it exactly right, but it's something like 50% of the unicorns were founded by immigrants. We also see very similar things. I mean, I mentioned TransferWise as one of our European unicorns in fintech. I mean, they had their big break in London, but they are Estonians and partially were in Estonia and programming there. And I think now they also have offices in Luxembourg, etc. So I mean, it is very much a European story from our successes. So we want to continue this and make the case for startup movement and startup use of the whole digital single market.
Thank you. Then let's turn finally to resilience. We've got just 10 minutes left or so. I threw out a few thoughts at the beginning on resilience. One area I didn't touch on was cyber. I know you've both got an interest in that area. Peteris, do you want to just comment on the framework for the financial sector that you've been working on and any impact from COVID?
Well, I mean, I think the impact, I mentioned a set of initiatives, and one of them is the one on cyber resilience. I can definitely say that it did not slow it down. possibly slightly sped it up, but really the experience of COVID has fed into definitely the evidence base. We've pushed a lot of transactions. We mentioned the discussions on Zoom, on other platforms, WebEx, Skype, everything. Also probably looking into the banks, they know better than I do, discussions confidentially with clients now on investment advice, etc., happening virtually, which they were probably equipped for before, but suddenly massively being moved on, and with perhaps more attention of cyber criminals that this is happening. So really our evidence base for what we need to do, what kind of attacks we're seeing now and might see in the future has grown. And I think the sense of urgency that we cannot live also in normal times anymore without this digital component of the economy, which is reaching more and more into every sector, that cybersecurity is absolutely essential. So the cyber resilience, which is for the financial sector, and it's my colleagues in DG FISMA and financial services who are leading, though I know it well, but it's also linked to the Cyber Competence Center, ensuring that we have both startups and corporates in Europe that are able to offer these tools, because we also have, we're not going for autarky of having everything only ourselves, but having autonomy that at least some of the offer is on the continent, and ensuring that. And as well, the cyber certification, assuring that on the basis of standards, and this gets back into the standard making, which needs to be, again, reflecting EU values and reflecting EU companies' interests also at the global level, that we have to make sure that the tools, the choice of the tools that are open for either the banks or the financial sector players or the individual consumer are when they need to be certified as being cyber safe.
And I know, I mean, maybe it's a question to you as well, David. I've got no reason to expect either of you to know the answer, so forgive me for throwing it at you. But have you seen any evidence? I haven't looked at the stats for a short-term increase in cybercrime as people use this as a chance, you know, as we've read about in the press, certainly. Have you seen that causing an impact?
I think anecdotally, much like yourself, Julian, there's been lots of press about, largely increased phishing attacks and so forth. So, I certainly get the sense that, that in the wider marketplace is the case. I don't think we have seen specifically, as I mentioned earlier, the majority of our external client interactions tend to be in the institutional and wholesale space. So it's a business-to-business model predominantly, not exclusively, but predominantly. And we haven't seen a significant increase to the best of my knowledge. But I can't attest that that's absolutely the case. I just don't have that information with me currently. But I think in the wider marketplace, certainly, as I say, anecdotally, you get the sense that there's been an increase in opportunities presented by, lots of people going online, perhaps people that hadn't historically embraced fully or at all the digital ecosystem. So maybe there was a level of naivety in certain areas of the population that was open to exploitation. So and I think just to follow on from Peteris's comments, we absolutely understand that cyber resilience is essential to our business model moving forward. So we continue to work both individually and collectively through our various industry bodies to make ensuring we have a resilient and scalable infrastructure and approach in place.
So you'd welcome that framework for the asset management industry?
Yeah, absolutely. I think we are working, as I say, predominantly through our European and UK trade bodies and consortiums to work in conjunction with that guidance coming out of the EU. Yeah.
I mentioned operational resilience, and in some cases, actually, the regulators have been interested in reducing the operational buffer because of the performance of the banks in their sector. I think that may be a little bit too early to tell, but as I said, it is encouraging. One thing I think to look at going forward relating to systems resilience, technical resilience in particular, is that I mentioned a kind of rush to features that I think will happen of people very keen to hang on to that customer behavior and deliver the digital customer journey to sustain that, to reduce costs, but also to improve the experience. And some of that is being done quite tactically for immediate COVID needs. And I think there's a question about whether people are able to overlay the tactical and make it strategic on their current estate and investment, or whether they do it and then they have to throw it away. And my point there is that what we know about resilience is that changing things materially decreases your resilience. And the banking sector was already, in the midst of a high risk renewal of the estate. And I'm concerned that the level of that risk of operational resilience not holding up because of the amount of change will be higher, because the way in which the change is done is sort of tactical, strategic, which makes the job of keeping an eye on BAU being stable that much harder. I don't have evidence to say things have fallen over. Clearly, the UK scenario of the TSB situation, which was well publicised, was not driven by COVID, but it was an example of what that can mean if you get the systems change not quite running perfectly. Any thoughts from either of you on that?
I think I think in some ways, I agree absolutely with what you say in terms of the tactical approach. I think what we are seeing and will see though as we move forwards is that, and I think I'm speaking specifically about the investment management world at the moment. I think there's going to be heightened expectations from clients, and I talk about clients now in the widest sense, so everything from retail through to institutions, in terms of the way that they want to interact with us. And I think it's probably fair to say, that the investment management industry is not certainly the forefront of digital engagement. Many of us are working, very hard at improving that, but I think we've got some ways to go. And but I think expectations in terms of that digital experience, but also the overall experience that clients get as a result of that. In particular, things around, in the investment world, the investment process they go through, the process of validating identity and so forth. That historically has been, pretty manual and paper driven to an extent. And I think we're already looking at a number of uses for new technologies in that space. We're working in conjunction with a number of our partners in various consortiums around, the market infrastructure of the future, if you will. Certainly a lot of, the advantages that distributed ledger technology and blockchain can bring to that. And in that whole kind of increasing the speed and transparency of that transactional process. And at the same time, it's still the experience for many clients that that settlement times are measured in days and so forth but they're then used to interacting with many other organisations where everything is resolved in minutes and seconds. So we've got a journey to go on, and I think the acceleration and that appetite will drive our industry on an acceleration into that whole space in terms of making that experience much more transparent and much more seamless than perhaps it is today. That's a generalization for the industry, but that's I think where we're going.
That's very interesting, very encouraging as well. I think that because expand that into the onboarding experience, which I think will be materially shorter as a result of innovation being fast forwarded in this area for customer and at the product level. I launched a business and ran it for a year in the late 90s based on the EID concept, and at that stage the standards and the technology really couldn't see it through. So I was interested, Peteris, to hear it called out in your part and your views, David. It's important. I think it's key. I do wonder if, as from the health sector and the track and trace side of things, whether or not well, according to the UK government this morning, there's no country in the world has sorted this out yet. I don't know if that's true. I don't think the UK certainly has. But assuming somebody sorts it out and we can all adopt the best answer, I wonder if that will mean a clarification on the questions of data privacy. We can sort of establish some railroads for really how far we want to go in that in Europe, but also the interoperability of that EID capability. I wonder if the track and trace can add something to that, because individually as a sector sitting within banking, I'd say it's struggled to operate on a single company basis or even at the institutional level to get this off the ground, because 1999 is a long time ago. Just before I hand back to the other David Reed, let me just summarise and then ask Peteris and David for any final comments. Sorry, let me just say we have a question here. We've probably got time to take this. This is probably one for you, Peteris. How will the German presidency affect the EU's blockchain strategies and projects?
I would say very positively. We just met with the German presidency, and Germany has its own blockchain strategy, which is on the high level in line with what the European Commission has developed with the European Blockchain Partnership. And we will probably have some virtual or physical events together, as well as the German presidency will probably be dealing with the digital assets legislative instrument and possibly the very beginning of the work on the Digital Services Act. So very positive indications. And in fact, Germany also has a tracking and tracing app downloaded by 18 million citizens, I understand.
That sounds like it's working then.
Yes.
Good. Okay. So we've covered a lot of ground. We've heard that the impact on the banking sector has been quite structural and it's posed some very large questions. We've heard that the asset management industry has accelerated initiatives in digital, and I think I'm correct in saying that your view is, David, that they will be sustained and built upon by the industry. We've heard from Peteris that the policy framework has not slowed down or missed a beat, and the European harmonisation, notwithstanding Zoom restrictions, is still very much on course, which is very positive. We've heard some risks that are there. Some of them are still in the known unknown territory, I suggest, and need watching pretty closely. But actually, I think there's quite a lot of optimism that the FS sector can be part of the answer. I would add, just before I ask you guys for final comments, a couple of caveats. One, it's got to want to, which I think means a balance of shareholders and other stakeholders, which is not a natural act for some institutions. And secondly, I would say, Q1 2020 loan loss provisions for the European banking sector are materially higher than 19. I mean, the lending volumes are up, obviously. A lot of that debt for Germany, Netherlands, for example, is straight pass-through risk to the government. In the UK, it's 20% and 80% with the government, in one case and 100% in another. But notwithstanding that, the sectoral impact on some high-risk areas, particularly the landlord sector, the hospitality sector for all European countries, a 450% rise in loan loss provision from UK first quarter 2020 back to 2019, 250% rise in Germany, 100% in Spain, 100% in France, and that's at a first quarter. So for the banking sector to be useful, it's got to be solvent. So I think that's just one to watch from my point of view. Peteris, any closing thoughts from you?
The EID, we're coming with an initiative and also have in the European blockchain services infrastructure a self-sovereign identity, so a option that is decentralized also for the identity, so to address various levels of both official identity and then more user-controlled identity to ensure that citizens have a choice, and this is a citizen-centered policy.
Thank you. Thank you very much. David, any closing thoughts from you?
Yeah, just very quick. I mean, an article I was reading earlier this week. This is very, very investment focused, but it was. I can't remember the exact stats, but investment over the period of pandemic into socially responsible funds or ESG screen funds, however you want to term them, has been significantly more resilient, I think, than more traditional products. And now ESG is a significant topic within our industry at this time. And I do think that the absolute S part of the ESG calculation and how some companies have been perceived to have acted in relation to conduct for their employees and so forth versus others may become really quite an interesting point of discussion, as part of that whole governance model as we move forward. Certainly, I think we as an industry are well placed if we take the opportunity to become absolutely essential part of that whole ESG and drive for green strategy as we move forward. But so I think that's probably my final comment on that.
That's a great uplifting thought to end with. I sincerely hope that comes true. Thank you for that. Gentlemen, thank you both, and thank you to our audience who hopefully stayed with us. David Reed, the first, would you like to say any comments before we close? Or to close us?
Yes, it's just to say thanks again to all of you. We're going to take a short break now from the plenary session. In 10 minutes' time, so at 3:15, 10 minutes now, 3:15 CET, we'll be joined by Francine Lacqua from Bloomberg, alongside Mary Shapiro and other distinguished guests for a debate on financing green recovery. So we'll see you back here shortly.